Hi, this is Phil from PDQ Merchant Enterprises and the ATM Mastermind group page, and in today's video we'll be talking about tax tips and how to classify your ATM cash and assets. Always remember, here at PDQ Merchant Enterprises and the ATM Mastermind group page, we buy your freedom back one transaction at a time. So if you want to know how to classify your ATM cash and your ATMs, we're going to go take a deep dive into that today and explain exactly how to do that. So point number one of the nice things, now we set up our corporation, we're in the ATM business. One of the nice things that we can do is we can start to use some of the expenses we have as tax deductions. So one of those things is most people have a car and most people have a car payment. So now what we can do is we can start to write off that car payment as a business expense. This allows us to minimize our tax exposure. I do want to say that I'm not a tax consultant nor a CPA, but I'm just sharing some of the tips and tricks that we've used throughout the years by a quality CPA and helped us minimize our taxes. So one of these tips and tricks as we use is that what we do is we start to write off car payments. That's a general expense for our ATM business. And then now that you're in the ATM business, you can start to write off some of these expenses, one of them being your car payment. So always seek the advice of a trained professional. That would be a CPA or a bookkeeper. But I'm just letting you know, one of the tax advantages that we have been able to, from our CPA, is been able to write off car payments. Point number two, we have a phone bill. So we have a cell phone bill, we have an office, and we have cell phone bills. But when I was first starting out, we had cell phone bills. We were able to write off those cell phone bills as a deduction. Now, this also, again, one of the things we're able to do is minimize the money. Well, Phil, what do you mean by minimize money? We're bringing in $10,000 in our ATM business. We get to write off our car payment. That'll take down our tax liability. So let's say $10,000 is our profit. We got a $500 a month car payment. That's 5 times 12, $6,000. Well, that will be able to deduct. Now, again, I don't know how much, if you'll be able to deduct it all or part of it. Your CPA will inform you of what to do and how to do it, but they will put that into your tax forms and then deduct it. If you're lucky, you'll get 100% deduction, and then therefore now you only have $5,000 left that you have to pay taxes. However, guess what? We have some more deductions. One of the deductions we have is we have a cell phone. So now we get to write off, let's say your cell phone bill is $100 a month. There's another $1,200. Now our tax liability is now going to be $3,800. $10,000 less $6,000 of car payments, less another $1,000. Actually, that's $4,800. So now $4,800 is our tax liability that we will pay tax on. Wait a minute, now we got some more one. So I help hundreds of aspiring ATM owners go for as little as 0 ATM owners to seasoned veteran pro in as little as 30 days. But if you're thinking about starting a profitable ATM business but don't know how, stay tuned to the end of the video and I can show you how to start a profitable ATM business even if you don't know anything about business. In this checklist, I will share with you 5 things you need to know to start an ATM business so you can start building your passive income business for your family. You'll have a clear business roadmap to ATM business success so you can earn $250 to $1,500 of passive income per month. Point number 3 is gas. We gotta get to and from the ATM, we gotta get to and from the bank, we have to buy supplies. This is all a deduction. Now, I'm not 100% sure, but I think you can deduct up to 55 cents a mile. If you just wanna deduct some of your oil changes and your gas, then that'll play in a part. But a lot of times, the accountant might say, you know what, we can deduct up to 55 cents a mile. You keep track of your miles from the time you leave the house or your place of business. You get to the office or you go to the bank, now you come back, all tax deductible. Now you go out to the ATM, keep track of those miles and come back. That's all tax deductible. There are apps out there that'll keep track of that if you want, or you just jot down in a logbook and keep that. You always keep those records for the end of the year, and if you ever get audited, you'll always have a nice record of that in case there's audited by your state or local government. Point number 4, cash. I hear this all the times in the chat. Phil, what do I do with the cash? Is the cash an expense? How do I log that? The cash is in the ATM is an asset. You put cash into the business, it goes in your ATM, it's going round and round. Your customer takes the cash out, you go to the bank, you put the cash back in. That's an asset. It's the same as if you buy a car for the business. That's an asset. We depreciate the car. Every year we can depreciate those assets. For cash, you don't depreciate it. It's still face value. It's a benefit to your business, and now it makes your business look strong. So if you ever go get a loan, you might have thousands of dollars. It'll be on your balance sheet, and that is going to be something that the bank's looking at. Oh, I didn't know you had $20,000 of reserve. Yep, that's in my ATMs throughout my ATM portfolio. Suppose you're interested in starting your very own ATM business. In this case, I want to invite you to my free training, the ATM Passive Business Checklist, where I'll share with you the top 5 things you need to start your profitable ATM business, so you'll earn passive income, make more money, and spend more time with your family. So click the link down below to get this free checklist. Register now. And this is Phil from PDQ Merchant Enterprises and ATM Mastermind Group page, where we buy your freedom back one transaction at a time.